What is up, you guys? Today we are going to talk about the overall stock market and when the next stock market crash is. What do I think is going to be that could continue to push this market up or pull it down? What are some of the things that we need to watch for going into the future? And what am I personally doing to get ready for the next stock market crash in 2020? So let's get started. The first thing is going to be technical analysis. Now, the way that I broke this video down is things to watch now and in the next coming weeks, and things to watch in the future. Now, when I say future, I mean, the next 4, 5, 6, 7 months, maybe even into fall and the holiday season. So the first thing to look at is going to be technical analysis and what is happening with the S&P 500. And in order to do that, we need to go over to my computer. In my stock market community in my private academy, and I'm going to talk later in this video, is going to be about fear and greed. And I'm not going to harp on it too much here, but we can see that if we go back on the stock market, especially on the daily chart, actually we should go to the weekly. This was December of 2018 when we hit those lows and we bounced from there. This was a very greedy time period in the stock market. In 419 days, we went up 41%, which is insane. On average, the S&P 500 goes up 7% a year, and we went up, in a year and, a couple months, 42%. And so this was a greedy time period. And now, obviously, what I've said all the time, fear is stronger than greed. And when fear and uncertainty are mixed is when we see these monstrous sell-offs. And so it took us, one of the fastest times probably that we've ever covered a 40% move up was 419 days. Well, it took us only 31 days to basically erase all of those gains. And that's because of fear and uncertainty. Now, we did get a big bounce, and a lot of investors believe that before they're going to put their money in, before we can trust the stock market again, we have to go back down, and we have to test, in my opinion, not lows, but we have to test some sort of support. I don't think we're going to end up going down to 220. I have a price level right around 260 or 240, but let's take a look at what's happening right now. So moving into the beginning of this week, we have what is called a head and shoulders pattern. So you can see here, we have this nice shoulder, we have this nice head, and then we had this nice shoulder here. Now, this was a nice resistance point where we tapped here, a couple times, and then we had a couple more points of contact right here, right at 289.28. But you can see that recently in the past couple of days, we took a big push up. Now, this pattern is kind of gone, but if we were to just take a zoom out, you can see the volume is getting pulled out of the market by the day. We are going up, we are making higher highs, but we are making lower highs on the RSI. And on top of that, this kind of move up is starting to slow down because people are not trusting this. I don't trust it. And overall, I just don't think that this is the next move up. I think that we're going to get a pullback. Now, currently, I do have, I think they're September 19th. They're pretty far out puts right now that I will be swinging. That's also more of a hedge against my portfolio, but I do think that we're going to take a pullback at least to $260 a share. Now, the second thing to watch is going to be unemployment. Unemployment is higher now in America than it has been since the Great Depression, and yet the stock market is still going up. I would personally say that the reason that these unemployment numbers are not freaking everybody out like they should is because we see a way out of it. If you look at the Great Depression, times were much harder back then than they are now. We see a huge spike in unemployment right now, but the thing is that people don't expect this to last long. We see a light at the end of the tunnel. A lot of people think that the entire nation could be back to work at 50, 60, 70% capacity probably by the middle of the summer, and by fall, fully back into the swing of things like we were before all of this happened. More investors and people see that once the new normal happens and we reopen the economy, that these unemployment numbers are only temporary and they're not going to have lasting impacts on the economy. Now, I personally would beg to differ, but we're going to get more into my bearish thesis on the stock market later in this video. Third thing to look at is going to be travel. And not only just the airlines, but the cruise lines, Airbnb, hotels, everything. All of travel in America attests to 2.8% of GDP, which is a lot for a small sector like travel. Recently, we are getting a lot of news articles coming out saying that airliners are filling up their planes now, that they're leaving middle seats open and that people aren't as afraid to fly. We have Carnival Cruise Lines and other cruise companies coming out saying that their bookings are going through the roof as of August when they reopen. But let's also be honest, that's because it's almost $28 a day to go on a cruise right now, which is extremely cheap. I feel that as time goes on, more and more people are going to look at this whole Rona situation and say, is it as bad as it really is? And for some people on the right, and we'll talk about this later on, you have people who don't care at all. They're going to go about their normal life, they're going to travel, they don't care. You have people on the left who are going to bunker down in their house and shelter in place until all this is over. Then you have the people in the middle. And the people in the middle are the ones to watch, because these are the people who are going to drive the economy and drive GDP into this year and next year. And those people in the middle are the ones that we have to keep an eye on to see, are they going to be traveling? Are they going to be shopping? Are they going to be spending their money like they used to in this new normal? And so when it comes to travel, I think more and more people are realizing that while this is a deadly virus, it's not as bad as we had expected when we first shut down everything. For people like me, I did plan a vacation to go away to Miami for a week in August. I have no issues with it. I'm not worried at all. Am I going to hop on a cruise liner and, be stuck out at sea or have to be forced quarantined 14 days when I come back? No, that's not going to happen for somebody like me. But this is a sector to keep an eye on. Now, the fourth thing to keep an eye on in the short term is going to be uncertainty. Now, we talked earlier about how fear mixed with uncertainty is how we see these crashes. And in the market, just like most people, does not like uncertainty. And that is why a massive sell-off that happened in February ends up happening. And now, do I think that we're going to see that again? I don't know if it's going to be as bad simply because we have more and more certainty about the virus, about the economy, about how life is going to be. And while it still might be bad, obviously, it's not like we don't really know what's going on now. And I think that the past couple months have given investors, consumers, and people in general some time to just sit back, look at the statistics, look at the facts, and think to themselves, this may not be as bad as we thought it was. Also, this could be a good or a bad thing, but seeing other countries and other states and things like the UFC reopen and see how that goes. Because if we see other countries reopen, everything is good, sports starts to reopen, all the numbers are great, then that could definitely help us and give us some certainty. But if other countries reopen, if other states reopen, and things get drastically worse, that can start to bring uncertainty back into the minds of investors and people overall, and we could see the stock market start to take a hit again. Now we're going to talk about some things that can make the stock market go up or down in the future. And like I said before, when I talk about the future, I'm really looking at fall to the holiday season. And the first thing is going to be a second wave. Now, I'm not a medical professional. I'm not going to stay on this topic for too long, but if you look at things like the Spanish flu, if you look at a lot of other viruses, there's always a second wave. And the second wave usually, unfortunately, kills and infects much more people. And this is something that a lot of virologists and a lot of people are keeping an eye on. Because imagine if we reopen the economy almost fully by the fall, and then a second wave comes, starts to kill and infect more people. We have to shut down the economy. We have to do this all over again. We don't have a vaccination. We still don't know how to treat it. That could really topple the market, and that's something to keep an eye out for. Now, the next is reopening with a vaccine. I'm not going to get too far into this either, because I don't care if you're an anti-vaxxer, if you love vaccines, if you're going to get a vaccine, it doesn't matter. But for a lot of people, they believe that we cannot reopen the economy fully until we get a vaccination. Because think about it. We did this whole quarantine because we wanted to flatten the curve. So essentially, if you don't know what that means, when the virus first came to America, it spread like wildfire. But it started with 1, 5, 10, 15, 20, slow, and then eventually it just goes up. And so the plan is, by quarantining, by shutting everything down, that we flatten the curve until really to just bide us some time. Because the truth is, if you're waiting for a vaccination to come out, from the time it started, it will take 12 to 18 months. And we've only been doing this for 2 months. So imagine that if everything's shut down, we come up, we flatten the curve. As soon as you open everything again, of course we're going to follow CDC guidelines, and we're going to try to keep everything as sterile and as clean and, everything as possible. We're going to see a spike again. And so for a lot of people, they believe we shouldn't even open the economy again until we have a vaccination or some medicine that can actually kill this virus for people. And then you have other people on the other side who are like, listen, we have to open it because I'm going to lose my job. My family's going to be living in the streets. And so for a lot of people, the thought that if we don't open with a vaccine, that could be a problem. Now, the third is something that I like to talk about, but I don't talk about too much on this channel because the whole stock market thing kind of takes over everything. But that is real estate. And for those of you who don't know, pending home sales are down 20.8%, which is huge. I think the analysts were expecting like a 10 to 12% drop, but we're down 20.8%. Obviously, if this continues, the market could fall because who's really trying to buy a house right now? I even know with some car companies, you have to actually submit your buying papers before you can go and test drive the car, which is absolutely ridiculous. And for a lot of real estate agents in the country, they're not even allowed to show a house. You have to do a virtual tour. And I personally would not be buying a house in these types of circumstances. Right now, this might not be too big of an issue for a couple months, but if this continues, if this goes out into September, October, November, and on top of that, you have all of these small business owners who are filing for bankruptcy, who are losing their houses, who are losing their jobs, they're not going to be buying houses. You're going to have a whole bunch of houses up for foreclosure. And on top of that, and this is not to disrespect anybody, most essential workers are not getting paid enough and are looking to buy houses right now. That's just the truth. Even me, I'm not trying to buy a house right now. I would like to, but I would never do it in these types of conditions. And so if this continues, this could be really bad for the real estate market. The next aspect of real estate is going to be a REIT. And if you don't know what a REIT is, that is a real estate investment trust. Now, for long-term investors, this is a no-brainer for me. If anybody ever asks, hey, I need help building a portfolio, what are your opinions? I will always add a REIT. But for me, going into the future is kind of worrisome. And I'm not even talking about on this, a couple months, but years down the road. I watched a really good interview with Kevin O'Leary, and he was talking about how, including him and a lot of his high-profile friends who own gigantic companies, they're realizing they don't need these skyscraper offices. A lot of corporations are realizing they don't need all of this huge commercial office space because, one, it's more cost effective to have people work from home. Two, these services like Zoom and Ring Central are really helping businesses connect online. And three, people like working from home. Some people can't do it, but the majority of people would rather work from home. They actually work better from home because they're judged on what they get done rather than how many hours they clock at the office. And it's just better for everybody else. So I think that in the next, 4, 5, 6 years, we could actually see less and less leases being redone commercially. And we could see these REITs take a huge hit. Now, another aspect of commercial properties is a company that actually has earnings this week called Simon Property Group. And for those of you who don't know, they own primarily malls and strip malls. And this is going to be something to watch in the next 6 to 9 months because not only are they going to have problems reopening, but I really want to see how consumer sentiment is. I want to see how willing people are to go out and shop, to go out and spend their money, because I see two things really coming from this whole quarantine situation. You're going to have people who are going to come out of this and say, hey, I was spending way too much money. I was going out to eat too much. I was buying too many clothes. I was buying a whole bunch of stuff I didn't need. I need to relax. I need to chill out in case something like this happens. Or on the other hand, you're going to have people who are going to be like, I've been quarantined for so long. I want a new suit, a new dress. I want to go to the beach. I want to get drunk. And these are the two sides that you're going to have. But like I said before, it's the people in the middle that are the most important to see how the majority of people are going to act. And if people aren't willing to go out to the malls, to spend money, to go buying clothes, this could really hurt these types of companies. And now the last part of the REIT sector would really be like condos, townhomes, and apartment buildings primarily in a city. I have a lot of friends who live in apartment complexes in Philadelphia and New York, and they're afraid to even get in an elevator with a whole bunch of people. Think of if you work in a high-rise in Manhattan, you're gonna get on an elevator with 100 different people, whether it's up to your corporate office like we talked about before, or up to your actual apartment, and a lot of people don't want to do this. I think that the more that we see this, the less people are going to want to live stacked on top of each other. Now, I could be wrong. I'm not a specialist when it comes to REITs, but these are just some things to keep an eye out for. Now, the last topic I want to touch is vaccinations. Like I said before, I'm not going to say you should get one, you shouldn't get one. I don't care what your views are. You guys can do whatever you want with your own bodies. But for a lot of people, a vaccination is necessary in order to get the economy going again. And now we saw companies like Gilead come out, a couple weeks ago. They had a really promising vaccination that they were going to fast track, and then a couple days later came out and said, well, we're having some issues. And short term, that's not too big of an issue. But what if there's one vaccination that comes out that looks really promising and they start to fast track it, we start to reopen the economy, and 6 months from now they come back and they're like, hey, we've put all this time, all this money into it, and it's not looking good. We're not going to be able to use it. That would really drive the stock market down, because that would bring fear and uncertainty back up to high levels, and that is what causes these huge market crashes. So tell me what you guys think. Let me know down in the comments section. What are your opinions on REITs? What do you think the travel sector is going to look like? What about unemployment? Let me know what you're doing. Also, I'm going to thank you guys for 1,500 subscribers. That's amazing. Make sure you hit the like button, subscribe to the channel down below, and thank you guys. I'll see you next time.